Did the CPI data just cancel the alt season, or are we about to send from here? And what are the two altcoins that look the most primed to pump if we do go higher? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when we drop latest content. Follow us on Twitter, altcoinbuzz.io, and as always, is not financial advice, and we wish the best of luck in your crypto ventures. Also, make sure to join us for our X Spaces Tuesday to Friday at our new time, 9 a.m. EST, link down below. All right, good morning, you guys. So yesterday we had the PPI data, which came in actually better than expected, and so the market was kind of pumping yesterday, but then it kind of stalled as we were waiting for CPI today. And the CPI today came out at pretty much what was forecast at 2.9% year over year. So the previous inflation for CPI was 2.7 and now it's 2.9. So it is actually higher, but it is what they were expecting and what they're forecasting. So let me show you this real quick. So we have Ash Crypto who said U.S CPI data will be released today at 8 a.m. EST. The expectations are 2.9%. If CPI is under 2.9%, then Bitcoin and alts will explode. If it's at 2.9%, the markets could experience a correction as last month's CPI is 2.7%. So that's what happened. And if it was over 2.9%, that'll be really bad for markets. So we came in at expectations. So the market could experience a slight correction as it was still above 2.7, which was the previous month. And so this is what is going on right now for Bitcoin. So we've been talking about this for a week now, where we wanted to close a candle back above this level, and we have finally done it. So to me, this actually looks good. So I like the fact that we are, we've closed this daily candle above this level, above 113 and a half. Now we held above here, and now the CPI came in at, pretty much forecasted. And so what I expect probably around New York Open is maybe we have a slight pullback. And then I think this pullback is where you're going to want to get interested in different altcoins, whether it's Bitcoin as well. But I do think we do have this play out where we get a slight pullback and then we continue higher going in towards next week. Now, I will say it will be a little bit choppy with FOMC. There could be some de-risking going into the, the Fed's meeting next week. But I do think we ultimately go higher over the next week. And I think any kind of pullback we get over the next couple of days or a couple hours really is for buying. And I think we do go higher. So that is Bitcoin right now. We have Crypto RS saying polymarket traders now see 3 Fed cuts in 2025 as the most likely outcome, flipping the long favored 2 cuts. So 3 cuts would be about 75 basis points. And we can see here on polymarket, actually it's gone up even more since this morning. It's now about 43% that there will be 75 basis points this year in 2025 right now, and about a 37% right now for 50 basis points. And so there's also a 9.6% chance that there's 100 basis points, and basically only a 5% chance that there's only 25 basis points for the rest of the entire year. So that is that's how we're seeing it so far right now. We also have the SEC chairman, Paul Atkins, who claims crypto's time has come.
And today, ladies and gentlemen, we must admit that crypto's time has come. For too long, the SEC has weaponized its investigatory subpoena and enforcement authorities to subvert the crypto industry. That approach was not only ineffective, but injurious. It drove jobs, innovation, and capital overseas. American entrepreneurs bore the brunt and have been forced to spend fortunes on building a legal defense instead of a business.
We also have Quinton saying Bitcoin demand for accumulator addresses has hit an all-time high. These are addresses that only buy and never sell. So accumulator addresses are what we want to be buying, and they are buying at an all-time high right now. We also have the BlackRock CIO, Rick Ryder, on CNBC, who says you should include Bitcoin in an ideal 2025 portfolio. And he says this much.
When you talk about Bitcoin should be part of the portfolio, what kind of percentage are you thinking about? Is it a 5%, which generally seems to be what people are talking about, more or less?
It seems high to me. So I run our global allocation fund. Mm-hmm. We're running long equities. We're heavy income. We're running, in the 3 to 5% region on gold. Gold strikes me today as a better currency hedge. Bitcoin tends to trade with vol, tends to trade with the NASDAQ. So we're running considerably lower than that in crypto. I just think it's going to go up, and I think it's a good expression. But 5 seems high to me, but it depends where you are in your life and how much risk you want to take.
And a quick shout out to Surge. It's this risk-free prediction game on Telegram where you just swipe to guess pump or dump, you earn rewards, and you pick up some market skills while you're at it. They've also kicked off a daily giveaway. It's super simple. Every day there's a coin of the day, and today it's Chainlink. All you have to do is swipe to find it on the Surge app, screenshot it, and drop it under their tweet. One random reply wins $10 in USDT, so it's super easy. So check out Surge, have some fun swiping, and maybe snag some prizes along the way. And then moving on, we have Chainlink is teaming up with more U.S. agencies to bring government data on-chain. The big picture, Sergey Nazarov says the tech could even help power on-chain elections one day. The rails are here, politics just need to catch up. And we have Chainlink Shang. We're excited to announce that Chainlink and UBS, a global wealth manager with 5.9 trillion in assets under management, and DigiFi Tech, a regulated RWA exchange, have partnered to automate tokenized fund operations on-chain under the Hong Kong government Cyberport program. So huge partnerships between Hong Kong, between US. Chainlink is doing all the partnerships. And then we have Say adding the Oracle infrastructure, which is Chainlink, trusted by the United States government, is live on Say. Together, Say and Chainlink are the foundation for high-performance digital asset markets that institutions can trust. Markets move faster on Say, so now we have a Say partnership with Chainlink as well. Then we have Chainlink sharing this video saying, enterprise adoption to revenue, revenue to link, link to Chainlink Reserve.
And so those deals, those off-chain deals, are things that people have asked us about and asked, how does this off-chain deal with this enterprise or with that enterprise, how does it relate back to the Chainlink system and to the Chainlink protocol? And that's been an open question about how that works. So together with payment abstraction, which is the system that needed to be completed in order for the Chainlink Reserve to go and be able to go live, we are now able to convert both the on-chain revenue for paying for Chainlink services into Link and put it in the reserve. And we're able to convert the off-chain revenue. So the off-chain deal revenue for the enterprise implementation, integration, maintenance, support, services, and other capabilities also can now be converted through payment abstraction and is now starting to be put into the reserve.
Now, this is the chart for Chainlink, and this is actually kind of what I wanted to see is we come back down here first, and I can actually enter a position somewhere around 2220-ish, somewhere around this blue box, as close as I can get to this level of support, and then enter before we go higher up towards here. Now, the thing I don't like particularly is that we swept above here. So you can see this wick here, it swept above these previous highs, meaning it was kind of like a predatory candle where it took out all the stops and now it wants to go lower. But in this case, it could be good because if it does go lower, this is where I want to be entering it. So it basically took out all the stops, and I wouldn't be surprised if we go lower on New York Open, and then we can get some kind of entry around here. As long as it doesn't go below these levels, this is probably a pretty good area to enter a Chainlink long somewhere down here, targeting back towards at least these highs towards $27. I like this as a trade, and I'd be looking to get into Chainlink because I do think they have a lot of big partnerships and a lot of things coming for, especially the next quarter. And a lot of coins kind of look like this right now. A lot of the coins we'll be going over, they pretty much look very similar to this right now. We're starting to do this bottoming structure right now, and this is kind of what we're seeing across all different altcoins right now. So if we can get into this, if we can get somewhere around here, I'd like to get into here. If we can get into this bottoming structure, I do think we have a rally coming in the next few weeks for altcoins. It just might be a little shaky in the long term, in the short term, going into the Fed rate cut next week. But overall, Chainlink looks great. And then moving on, we have Clearpool, who says milestone cross, $10 million plus in interest paid in stablecoins to lenders. Clearpool enables anyone in DeFi to earn risk-adjusted returns on stablecoins, no longer reserved for large players or financial elites. From individuals lending $20 to institutions deploying millions, Clearpool has participation across every level. This is more than yield. This is financial inclusion in action, unlocking opportunities worldwide and reshaping how capital flows in this new stablecoin economy. Clearpool is building the future of RWA lending since 2022. And Clearpool's role in PayFi. Clearpool is the credit layer powering PayFi. By aggregating capital from both retail and institutional lenders, Clearpool supplies PayFi firms with the stablecoin credit they need to operate at scale. PayFi firms then extend the credit to fintechs such as payment service providers and remittance platforms, enabling them to sell transactions faster and more efficiently. Clearpool is the liquidity behind the liquidity. And Kenny adds, the illiquidity premium works in TradFi because institutions are used to waiting years. But in DeFi, liquidity is the premium. That's why we're max bullish on PayFi at Clearpool. The underlying is ultra-liquid, recycled credit that can turn over up to 50x annually. And lastly, Clearpool will be at Korea Blockchain Week. They said we're bringing PayFi to one of the fastest moving crypto markets on the planet. Strategic partnerships, panels, keynotes, meetings with leading institutions, and one unmissable event will be hosting await at Korean Blockchain Week. The momentum is just getting started. So that is Clearpool, and you can also find them link down below. And then we have Crypto Ed saying another huge win for Ondo. Ondo Finance has appointed Peter Curley as head of global regulatory affairs. This is massive, but why? Peter's resume speaks for itself. 7 years EVP at the Hong Kong Exchange, 4 years associate director at the SEC, deputy director at the FDIC, senior policy advisor at the U.S. Treasury, and senior advisor at Coinbase. From TradFi to Web3, Peter's experience bridges the gap perfectly. With recent moves like Wisdom Tree Global Market Alliance, Fidelity FDIT 99% OUSG allocation, global markets launch, it's clear Ondo isn't just growing, it's building the regulatory foundation for the future of tokenized markets. And also, Ondo is now the #1 fastest growing crypto by TVL. Tokenized stocks are being bought at $1 million per hour, and Ondo TVL breaks an all-time high again at $1.522 billion. We also have Ondo financing a 1 week, $100 million plus TVL. Ondo Global Markets is now the largest platform for tokenized stocks and ETFs. Now, Ondo has pretty much done what we wanted Chainlink to do. So this is the same structure. We're consolidating down like this. We've broken out of this trend line. You know, if you have this, imagine this trend line kind of like this. We've broken out of this trend line, and now we're heading back up to this target. This is what we wanted. We wanted this to kind of go sideways, which it has done now. It stopped being as volatile and then is now broken up. So there's really not too much to do for Ondo. We pretty much, you know, if you're not in this, you kind of miss this. So not too much to do unless it comes back here and you want to get into a position somewhere down around 95 cents. But I think either we're going to wait for it to consolidate here and then maybe we can look for a lower time frame trade. But I think either it comes back down here towards $92 or 92 cents and you get into a position, or you kind of wait for it to get back above 120, 119, 120, and you look for position back above here for a new position. But right now we're pretty much in the middle of this. So this is not the place you want to be entering Ondo. The place was we were talking about back down here. And then moving on to Say, we have a dominant stablecoin adoption, all-time highs in TVL index volume, and growing leadership across gaming, DeFi, and RWA markets. H1 marks Say's emergence as a preferred base layer for financial applications. We also have Say in turn saying, Say spot trading just hit $2.223 billion, a quarterly record for Q2. Don't fade the momentum. We also have Ocon saying, while most networks are struggling to keep momentum, Say network is pulling ahead with unstoppable growth. The daily active addresses are Say at 787,000 plus, with Ethereum right behind at 537,000. The chart shows it clearly. Say is not slowing down. Activity, liquidity, and community adoption are only accelerating. Say isn't just keeping up with the big chains, it's outpacing them. Markets move faster on Say. We also have Ryuzuki saying, Say is ready for the pump. The main catalyst going to be the ecosystem TGEs like Yay Finance and Folks Finance in the coming months, plus rate cuts in September. DeFi and gaming already heating up with Dragon Swap delivering high APY and Kame aggregator partnership with T-Rex. And lastly, Yummy says, why are people calling Say the next Sol? Not just vibes and bullish community, it's backed by real numbers. The TVL exploded to 600 million, a 30x in 2025. The weekly volume hit 1.3 billion, which means real money flowing in, 200,000 transactions per second, native USDC, RWA, and gaming and more, a Say ETF filing, and a $7.5 million foundation grant. Now, Say, again, is pretty much in the same spot as Ondo, where we were wanting to get it closer down towards $28, but it is starting to break out of this, you know, kind of descending channel we have here, and it is looking really good. If we can get any kind of pullback down here towards 29 cents, I don't know if we'll get that, but if we do, this is probably a pretty good buy. If we can get as close as we can back down here as we kind of go sideways, it's looking like a good position back towards the highs, because I do think Say is probably going back up here towards these highs around 54-ish cents. So any pullback down here in the next couple of days, I'll be looking to enter Say and targeting back up here towards 55-ish cents, which is about a 96% pump from there. I do think we probably will get that in the coming months. And then lastly for today, we have why Concordium's compliant first blockchain could push stablecoins mainstream. Despite over $7 trillion worth of stablecoin transactions in the past year, these digital dollars and euros are rarely used to buy groceries or pay bills. One enterprise-focused blockchain company, Concordium, believes a lack of security and compliance is holding stablecoins back and is proposing a solution. This week, Concordium announced the 3 stablecoin issuers, Stabler, Kolb, and VNX, which launched their fiat-pegged stablecoins natively on its network, part of a broader push to bridge crypto and real-world finance. The new stablecoins are pegged to major fiat currencies, including the British pound, the US dollar, and the UAE dirham, extending Concordium's reach across regions. These assets will leverage Concordium's identity layer and zero-knowledge proof privacy features, which provide built-in compliance controls and lower security risk for institutional users. Concordium's infrastructure is designed to enable stablecoin issuers to meet regulatory requirements such as know your customer or geographic restrictions without compromising user privacy or security. And Concordium's expansion comes at a time of surging stablecoin activity and a realization that most of it remains within the crypto markets. Over the last 12 months, stablecoins handled an eye-popping 7.1 trillion in on-chain transaction volume, rivaling the scale of major payment networks. Yet by Concordium's estimate citing Visa data, only about 1% of that volume represents retail payments or everyday commerce usage. Now, Concordium is positioning its chain as an ideal home for these efforts by providing off-the-shelf compliance features and a safer token model. The idea is that regulated entities like fintech firms, banks, or payment companies will be more willing to use and adopt stablecoins if the underlying blockchain offers identity verified transactions, governance controls, and reduced risk of hacks or fraud. So that is Concordium and stablecoins. And that is the video for today, guys. As we are waiting for New York Open, we're waiting for probably a little bit of a sell-off. But like I said, I like that we closed above here. This is exactly what we wanted. We held above this level on a daily close candle yesterday. So any pullback down here towards around $112,000 is a buy for me. And I like that we have now changed the market structure because we are now making higher highs and then hopefully higher lows as well down here towards $112,000. And that's what I'll be looking to enter on Bitcoin and similarly altcoins that we talked about today. So that is the video for today, guys. I hope you enjoyed and I'll see you tomorrow.